Good morning, everybody. Today's September 10th, 2021, and they opened the stock market today with a moment of silence for 9/11. So I think that everybody should make sure you think about that day and where you were. I remember where I was. From that point on, the world changed. I was in shock when I saw it, and it took me some time to really process what was going on. I actually went to the Brewer ticket office that day, and there's nobody anywhere. And I'm thinking to myself, okay, finish up, go to the office, get to the office, and that's all they're doing is watching the TV. One of our partners had a nephew who was one of the 2 or 3 biggest traders of the Qs back at the time. I think it was QQQQ at the time. Now it's just QQQ, the ETF. But he was trading NASDAQ futures at the time, and he normally would have been in the World Trade Center. And that particular week, he was down in Florida. My cousin was supposed to be in the World Trade Center. He stayed home sick with the flu or cold or whatever it was he had. And I have heard all sorts of stories like that. Well, so-and-so went, my cousin went, my uncle didn't, my brother didn't. You know, people who may have supposed to have been there were there, and other people didn't go that day. Or trains were late. Or for whatever reason, they just missed being in that morning in that building or in those buildings where 3,000 people died. So if you're not old enough to remember what was going on that day and that night, that night I ended up with a group of Marines sitting in a bar on Water Street in Milwaukee, Wisconsin, just talking about what the hell's next. And that went on pretty much most of that week as a lot of things got shut down. And you look up in the sky and not see a single airplane. I think there wasn't an airplane for 4 or 5 days. And the world changed. Now, 20 years later, we're finally out of Afghanistan. And there's people mad about, the last couple days of how it happened. But the reality is, you can't forget things like that, because if you do, they happen again. But at the same time, you can't fight wars forever. And when we politicize things, buy into propaganda, and that helps destabilize the country for such a tiny, tiny, tiny fraction, a fraction of 1% of the people's benefit. And I don't mean just the richest. I just mean people who would exploit divisional politics or divisional economics, right? The sorts of things that we should think about, I think, on important days, on the 4th of July, on Veterans Day, on 9/11. Are we united? Or are we not united? Are we smart? Or are we panicky and reactionary? Do we look forward or do we look back? And I just would like everybody to try to reflect on 9/11, because it wasn't something that came out of the blue. There were threats. We knew there were disgruntled people with us around the world. We have a hard time admitting that we're not perfect, but we also have a hard time saying that we've done an awful lot of good things, even though we've made mistakes and certain people have profiteered. So it's a very, very complicated web. I think we just need to realize that there's people all over the world that have feelings too. And pretty much everybody just wants to try to be happy and healthy, pursue their own life, liberty, and happiness. So on days like this, I think that we should all just take a minute and think about what's good and what's bad. And how do we get to the good? And how do we mitigate the bad? Because you can't get away from it altogether, by being smart and inclusive, considerate, and respectful, forward-looking. So if you remember 9/11, you can put it in the chat if you want to. Do you remember where you were that day? You know where you were the moment that it happened, that you found out? I think anybody who is old enough is going to remember exactly where they were. And I know the spot on the carpet I was standing. It was a Kennedy assassination type of thing. Generations will remember. So if you know younger people, I'd encourage you to talk to them about it, or at least get them to turn on their Apple TV and watch the documentary that just came out. And there's an older one too. I believe it's a CNN production. Some of the documentaries are really good. So look back, reflect, teach somebody younger, at least point them in a direction that they might absorb it. Let's just take a moment to think it through, pay some respect. Now it's time for us to be a little bit forward looking. So investing, as we've been talking about for the last month, the markets have been a little bit more choppy and the buy signals have been going away. I think it's important that anybody who has some FOMO left, who's frustrated because, oh my gosh, I've been missing some things, take a look at the stocks we've been buying. If you're not watching some of these SPACs that got beaten down 30, 40, 50, 60, 70, 80% that are viable companies, and notice that it doesn't take much to move them up, you're missing the boat. So next week, and actually after the close today and this weekend, I'll probably have this up by Sunday morning. I've revised the retirement income options to focus on the plug and play coverage, taking the exact same charts from the plug and play list, just changing a couple of columns. I'll have the option idea here and the minimum price you should try to get for your premium when you're selling your option, put or call. And these trades probably change about once a month. So once a month, we'll have this very big post options expiration article with all the things that you should be targeting for the next few weeks. And then from week to week, if something moves, I'll just have an update with here, these are the 4 things that move that we need to adjust, or these are the trades that are hot right now that, hey, our prices are getting hit. Make sure you take a look at this. And I would just encourage you to really take a look at these companies because they're starting to move. We talked about how indexing impacts the stock market for 3 or 4 years now. And I've talked about how the indexes are going to create higher highs than lower lows, probably. But as more people dollar cost average into indexes, especially the S&P 500, thought it was interesting this morning when I saw this article on Bloomberg, which you really should have. I show you that index all the time from Sentiment Trader, the Smart and Dumb Money. Well, here you go. An analyst is screaming, the dumb index cash is the tail wagging the dog. You have so much money going into indexes that it pumps up the large caps, the largest of the large caps, because SPY and QQQ are market cap driven. And you start to get distortions. And these guys who are talking in this article are kind of a who's who. Ned Davis, Trim Tabs. You're talking elite money managers who beat the market with big piles of money. And the bigger your pile of money, the harder it is to beat the market. We have small piles of money. We should all be beating the market. I've been holding outsized cash for years, still hanging around the indexes. But still, my risk-adjusted returns are huge. Because had I been fully invested, I almost doubled the market. The thing that's been scaring me from getting all in is that all this dumb money chasing is just setting us up for a very big fall. And the only thing that can save us is the Federal Reserve, which everybody hates. When this Fed taper comes, when regulation of cryptocurrencies come, man, if those two things happen in about the same time frame, it'll be a double whammy. So I have become more and more convinced that crypto is here to stay. I just don't know that's going to be in quite the form that everybody thinks. I think the digital dollar is going to be a big deal. I think a lot of money is going to move. Take a look at Tether and the other stable coins, but Tether is the biggest one. And you go, huh, those things are going to exist. They have to be regulated as money markets. There's no other way. And Tether, half of its portfolio, can drop in value by quite a bit. Can you imagine a money market breaking the buck by more than a penny or two? Take a look at Tether. And if you equate it to a money market, you're talking, could get down to 60, 70 cents pretty easy based on the construction of their portfolio. Well, it's billions and billions of dollars. It's bigger than a lot of hedge funds that blow up, that they have to have these stealth bailouts to keep the market from getting unstable. Imagine a lot of crypto money went poof at the same time the Federal Reserve is pulling back stimulus, QE. Market starts going down, stocks go down. What do people do? They panic, they sell. What are they going to sell? They're going to sell a lot of indexes. That creates selling across the board in the S&P 500. And if we're lucky, I say if we're lucky, they sell QQQ, we get a shot to buy Microsoft and Apple and Amazon and Alphabet cheap. Maybe, if we're lucky. But I'd encourage you to read this article because it talks about valuations are structurally higher and rising. We've talked about valuations. Corrections are rare and shorter, but if there's less liquidity, it's really a straight down elevator chute. Because panic selling, if you get panic selling, we're in big trouble. Because the market goes straight down for 2 weeks before the Fed can do anything about it. Or maybe they don't even want to. Maybe because prices are disconnected from fundamentals, maybe they want to bring that back in line. And maybe because the super wealthy are already sitting on cash, that would give them an opportunity to buy all the best stuff cheap again. What I think is going to happen. See it over and over again. Carpet gets pulled on the little guy. Big guys come in with their cash and their checkbooks and say, well, I want that one and that one and that one and that one because those are the best. So if you're an ETF investor, I think you should be trimming into this strength, probably heavily at this point. And if you're a stock investor, you really need to focus on what's the best, what has the most upside, where you can get really good risk-adjusted total returns, depending on the type of investor you are. So I'm going to bring Shooter on here. Just going to take a look at what he's seen in his chart. There you go. Unmute. Are you there, sir?
Yes, sir. Good morning.
So tell us about the S&P 500. How likely are we to get to this 3 before we see a correction? Could we see a correction earlier?
I still think we put in that 474 first. We need to close below, obviously, the 50-day for us to get there. And before that, we still need to take out our 8-day resistance, which is, I don't even think we get that a lot. I think we keep this tight wedge flowing up to 474.
So again, I would point people to a couple of things. On the weekly chart, we're overbought. How much more overbought can we get? It's always a question, but you can see that, with the exception of that spike, it's getting close to the danger zone. Days, maybe.
Oh, we're in the danger zone. It's just, I think we have continuation first.
You know that I'm a big fan of shaking money flow. When it peaks and starts to fall like this, you usually get follow through, zigzags down. That money flow indicator has been pretty historically accurate coming off of extremes. So again, shaken, falling, probably going to go up today. Then it'll probably go down next week. You get those zigzags. Be very careful on how you allocate money And I wouldn't chase. I would be firmly in the sell the rips camp versus the buy the dips camp now. And buy the dips was certainly correct until a few months ago. I think sell the rips is clearly where we are now. And the only thing that could drive this market higher, in my opinion, is if the Federal Reserve suddenly said, you know, we're not going to taper. And they just kept pumping money into the system. In which case, in the article that I'm writing now, has to do with stagflation. If the Fed keeps pumping and Joe Manchin holds up the reconciliation bill, now you have a recipe for stagflation because the economy would slow down, but money keeps going into markets, gaming the system, the casino. So if you ever have spent 36 hours in a casino, then you walk out and you realize you've missed a day, you don't move real fast that day. I think that's what could happen to the economy if they don't taper and they don't pass the reconciliation and infrastructure bills. I don't think there's a lot of risk of that happening, but if it does, you better be really careful. So over at QQQ, still looks like there's a little follow through for that potentially as well, Scott.
Yeah.
All right, so QQQ has a few more points. It could make a run at around 400.
My count's not to 400. I've got, right now I'm chasing short term 15504, which, what is that? 376 on the Qs.
The Elliott waves are saying that we're close to these tops. And my point to you with 20 plus years of Elliott wave experience is that when we get these close to the tops, they can terminate abruptly. You don't always get your week or two of notice. Sometimes you get a day or two or three. So again, if you're a position trader, right, somebody who's longer term in nature, these are times where you scale out in case the market moves abruptly on you. If you're a swing trader and you just need the action, you can buy these little dips, but you better have very, very tight stops. I think the point here today is that because money's driving in the indexes, it's almost completely liquidity driven. If that liquidity keeps drying up, which it already started a couple months ago, when the taper comes, I think there's a very large group of people who have no idea what that means because they're brand new investors. And when the market starts to go down, they're going to panic sell. And I know they're going to panic sell because I've been talking to my cousin, my nephew, and a bunch of other Redditors, and they truly believe that if it's not going up, you get rid of it. They believe that. Right? Who is the old movie star who said, I only buy it if it's going up? Not even Will Rogers. Expect these markets to drop hard once the momentum is gone because the marginal money believes that if it's not going up, you get rid of it. They believe that. So just as they've been pushing the markets up with their marginal money, right? It's the added money to the market. They can drag the market down. And remember the conversation we had a year ago where I told you they're learning how to use options and they've been buying calls to push things up. They understand that buying puts would push things down. So we'll keep an eye on those indicators because Sentiment Trader, gives me those. If the retail crowd starts to buy puts, you better watch out. All right, officially the end stages of summer. Enjoy the weather, enjoy the sunshine. And I would encourage you to always have in the back of your head, what are your thoughts about where you want to be in the world a few years down the road? And just once again, to close with, don't ever forget 9/11. And you might want to really watch that Apple documentary because the origin of that phrase is discussed. But let's always remember that we're on the same side. All right. Have a good weekend.